Greg, I got a hold of you this morning. I wanted you to come to the show and bring, some ideas for this new segment that we've been playing the last couple of weeks called Buy One, Hold One, and Dump One. And so basically, Greg, you've got 3 different stock ideas and the time horizon is investment, correct?
Yes.
Correct. So we're thinking longer term here, guys, not a short-term swing trade, not a day trade, not even a shorter term position trade, more like an investment thesis behind these things. Greg, what do you got for us?
Well, I had to narrow it down. I actually had four of them today, and I couldn't come up with another clever name for the 4th one, so I had to drop one of the candidates. But let's start with Bank of America. So we just got past earnings. A little bit of a pullback retracement there, touched off the 50, big green candle yesterday. So technically, I like the setup. It's again, like I said, just past earnings there. In a sector that's been doing pretty well. Financials have been pretty strong. Tyler, if you can pull up the webpage dividendinvestor.com for me.
So Bank of America is your first idea. Okay.
That's number 1, yeah. So technically I like the read because like I said, I like the bounce off of 50. And again, the sector's strong. So if you throw Bank of America in there, Ty, you have to close out a pop-up first. That's what it does, this website. So right there.
Top right, right?
Yep, BAC, my friend. Thank you. So we're 1.86%, 1.86% dividend, dividend payout ratio of 39%. So there's no danger there. Dividends paid since 1903, pretty reliable. The kicker to this one is it has 7 years of consecutive dividend increases. You can scroll down to the bar graph just under there, Tyler, please. You get some revenue numbers there if you want. So the big kicker with Bank of America, which should be a no surprise to anybody, was 2008 became a rather large challenge for them. Since 2014, essentially, they've started to kick things back up, but there was that period where they had some issues. So that's number 1 from a fundamental perspective. You've got you've got some history there, but it's also got some sordid history. And then, like you said, the current dividend that they have is in no danger from a dividend payout ratio perspective. And then just like the technical setup, the bounce off to 50 for a continued ride up.
Okay. So right. Bank of America is your first idea. What do you got second?
All right. So this is a bigger dog, this one. Clorox, CLX, please. All right, so Clorox, technically speaking, we've had a pullback, pretty well, I don't even want to call it pullback. We've had a beat down since last August, pretty solid beat down. It's starting to make some tracks, some higher highs and higher lows right at the edge there. Above the 50, above the 20 now, looking for a breakout there right on the top there. It does have earnings coming up shortly, so let that be your guide there. You could, if you're interested, be waiting until after that. If we go look at the data on dividendinvestor.com, so you got about 2.27%. Your dividend payout ratio is only 46%, so no issue there. 1968 was their first dividend, and they've had 44 years of consecutive dividend increases. So if we look at the bar graph down below, it'll tell you exactly what we already know. These guys just keep continuing to up their dividend. And they've done so pretty consistently.
Okay, so a consumer staple company that consistently pays and ups their dividend over time. I got you. A little bit of a weaker technical read, but that's not really what we're talking about necessarily here. That might be a tiebreaker here for somebody. But what's your third one here, Greg? So two quick ones: Bank of America, Clorox, 1 and 2. What do you got third?
Yeah, I had to juggle these two, but I'm going to go with Hormel Foods, HRL. So this one here, this is not going to light you on fire from a price perspective. It's pretty much the same price it was a year ago. It's very choppy. It goes up and down. It's had a wider range since last August. Weekly perspective, it does kind of move, in an upward direction over the course of the last 5 years. But it is kind of troublesome right now, just from where it's standing. It has stuck the landing at around 46 for support recently. So technically, I think that's a pretty solid level. does appear that it might be going down there to test that again. If we go look at the data in dividendinvestor.com, you got about 2% dividend, so it's not lighting the world on fire from that perspective. But the key points here, dividend payout ratio that's decent, under 60%. You've got 54 years of consecutive dividend increases, and you got dividends paid since 1928. Just a rock star in the dividend world, this one is.
All right, let's go back on the charts. Let's get a quick review of all three of them. Then we'll have a conversation about this. So first company Greg brought here for buy one, hold one, dump one was Bank of America, 1.86% dividend, longer term healthy uptrend, obviously a huge juggernaut in the financial sector, 39% ratio like you talked about, had disruptions when there were banking disruptions like in 2009. Clorox was second at 2.27% dividend. Obviously, give me a weekly chart on a couple of these here, Tyler, if you can. Clorox took off last year, after the pandemic. Everybody's buying, hand sanitizers and all that kind of stuff. Strong demand for their underlying product. That trend obviously proved to be unsustainable. It's now backfilled quite a bit from its highs there over time, but 2.27% dividend, had a 46% ratio, increased their dividend for 44 years in a row. And then Hormel, last one, a 2% payer of their dividend at a 59% ratio. The packaged food company here, obviously not going to be a swing trade type company, but that's not what we're talking about here. We're talking investment, and it's had a 54 years of dividend increases. So it has been one of those juggernauts as a dividend payer. All right. Who wants to judge first? Who wants to go first? Matt, Tyler?
I'll go first.
All right, Ty, let's hear it.
I would buy Clorox, hold Bank of America, dump Hormel.
Okay. Why?
I would buy Clorox because I like this. I think you're getting a decent retracement. I mean, you're getting it quite a bit off the highs. You're $40 off the highs. So I like the entry point on Clorox. I think I'm holding Bank of America just because banks are in a good spot right now, and it's been working. I'm dumping Hormel because I have to dump something, and I don't like the name Hormel.
Okay.
This man hates chili.
He doesn't like that Hormel chili there, Greg. Matt, you want to go next?
I'll go next. I agree with Tyler. I think Bank of America is a hold. Number one, there's nothing Bank of America has done to make it not a hold. And I agree with Tyler on the banks moving into the future. And Bank of America has good valuation. You can write covered calls against it, and you don't have to worry about their dividend. Clorox, I like Clorox here above 200. And if you the chart's kind of a little crazy trend analysis, but let's smooth that out to the ultimate and put that on that monthly chart. And Tyler, you tell me you don't like that above $200.
There's no denying its consistency. I mean, it's been good.
Right. So I do like Clorox as a buy more than Hormel, and two reasons. Number one, excuse me, two reasons. Number one, I do like the technical analysis on Clorox a lot more than I like the neutrality that we're seeing on Hormel. And yeah, it's volatile, but it's volatile between 45 and 53, right? It's not exactly like a tech volatility. I think you're perfectly fine with the Hormel's volatility as an investor over time. And so the difference in the buy of Clorox and the dump of Hormel for me is really about, the confidence, that you have on any long-term investment you can do with covered calls. And you just don't have any volatility truly in Hormel. You can't do much from a covered call perspective. So I know we're just doing long-term investing, dividend stuff, but tiebreakers for me, and the tiebreaker for me on Clorox versus Hormel would be I like the trigger on Clorox at 200 because I think you got more growth potential on Clorox above 200 than you do on holding Hormel. I do like covered calls on Clorox a little bit more than on Hormel as well. And then obviously what I say on the hold was Bank of America for me.
Mm-hmm. I got no problem with any of that analysis. I mean, where my head was, I'll just throw in, I think Bank of America is a buy I believe Clorox is a hold if you've already been an investor waiting for those technicals to develop, because it's just kind of churning out, some of the gains they had last year that trend was unsustainable on. I have no problem if you call on Clorox to buy though, guys. It's not like I disagree with that. That 200 trigger does look good. And really all three of these charts should be looked at on a weekly or monthly chart, right? We're not talking about good daily price action in dividend type companies like this, the long-term trends. And even Hormel does look good long-term. Like if you look at that 10-year chart, it looks fine. It's a grindy dividend pair that does
there's nothing wrong with it.
just fine. So, but out of the three of them, I would dump Hormel. I have the least interest in it. I haven't traded options on Hormel like I've traded on Bank of America. Bank of America is a wonderful cover call company, from that type of system. People who hold Bank of America want to write options. They got all the liquidity in the world to do that. And Clorox is fine in that regard too. So I would dump Hormel, Greg. Sounds like consensus. I would buy Bank of America, and I would hold Clorox. So I only had one little difference between these two guys, but all on board. Greg,
I can't fault any of your analysis, but of course I'm always on the other side of the fence here. I do like the price appreciation potential of Clorox. I do think that Bank of America would be a buy currently, just because I think you can get, going back to the daily chart there, I think you've got an opportunity for, kind of a quick little run up there, a $2 run up there. So I think you've got that bounce off to 50. I think that's an opportunity to buy there. However, the way I look at these things are a little bit different. My only concern with the banking sector is what we saw in 2008 all the way up to 2013. Bank of America couldn't hold their dividend. We look at the other two, Clorox and Hormel, didn't really have the same issues. Clorox a little bit, but Hormel hasn't had an issue for 54 years. So, anything the world has thrown at them, they've been able to strive through. Again, when you start looking at that longer term chart, it does continue to go up. It is kind of, you look at it from a shorter time frame, it's a little bit choppy. For me, Hormel would be the hold. I would buy Clorox and I would dump Bank of America. And the only reason being is, like I said, their dividend doesn't seem as strong to me. I can cover call Hormel, which I've done for a long time. I can cover call Clorox, which I've done for a long time. Bank of America, you can cover call it, and it does pay you some decent returns. My concern is if I'm holding this long term, and that's really what we're talking here, I need that security of the dividend. And really, I think, I don't think there's even an argument here which one has the biggest security when it comes to that dividend payment, which is Hormel. Obviously, 2% isn't lighting the world on fire. However, I think there are opportunities here that, any decent pullbacks here, which, 46 would be fine, 44, 43 would be great, which is always in the cards. Then picking it up and increasing that dividend yield could be decent too. So that's where I look at it.
For you, it came down to the dividend yield and the payout ratio and the long-term consistency. Maybe you just like their chili, Greg. I don't know. I'm feeling maybe a little bit of bias.
Yeah, we don't even get this stuff here in Canada, so it definitely has nothing to do with the food stuff. But I know you guys buy a lot of it, so I'm good with that too. So
yeah, 3 longer-term ideas around dividends and cover call type of systems here, Greg. So I appreciate you bringing these 3 ideas to the show here today for buy one, hold one, and dump one. Now we obviously were on a little bit of the different side of it than you were, but that's kind of the fun of the analysis.